everyone, and thank you for watching my videos. We are now going to talk about the US dollar index and its pertinence in the Forex market. So here's what we need to know about the US dollar index. What it is, it's a chart or a method of showing us how valuable the US dollar is in many different economies in the world. And it's also important to know how valuable the US dollar is because that can also tell us the direction in which many currency pairs headed. So we need to pay attention to the type of impact that the US dollar makes in the different economies. That can also help us understand the Forex market more, thus increasing our profits. Now, let's talk about the basket. The basket just makes up a collection of currencies that are commonly traded against the dollar in order to determine how valuable the US dollar is. So we're talking about these currencies here: the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the franc. So what we're doing is we're comparing the currency pairs with these currencies in order to get a number, which is the index that tells us whether or not the value of the US dollar is high or low. And also, there are 21 countries that are involved. Now, I say 21 because we are talking about the Eurozone, which is a group of member states sharing the euro. So we're talking about significant number of highly developed countries here. So that also gives us an idea as to what they're doing with the US dollar. Okay, so here we have a pie chart which shows us how much influence certain currencies have on the value of the US dollar. And as we can see, the euro has more weight on the value of the US dollar than all the other currencies. So it's safe to say that what happens in the European economy and what information we can get from data releases when we apply fundamental analysis can determine how valuable the US dollar will be now and in the future. So again, with the euro consisting of many different members, we should pay really close attention to any decisions made by the European Central Bank or what's happening with the European governments, such as political unrest or any military conflicts that one of the Eurozone members might be involved in. That can also have a profound impact on the euro as well. So, how do we read the dollar index? Well, here we have a chart which shows us the US dollar index. Notice that we have bullish trends and we have bearish trends, which gives us an idea that the strength of the US dollar fluctuates from time to time. Now, how do we calculate the value of the US dollar? By following this formula. Now, it is not necessary to memorize these formulas because we can get this chart from many different places. We can even go to finance.yahoo.com to get this information. But you see, as I explained before, the reason why I place these formulas on the slideshow is because I want people to understand how to use the tools that are provided to us on a trading platform or any other source. Because any tool or any strategy, if we don't use it properly, it won't help us. Now, most people out there don't really enjoy plugging in numbers into a formula, but it does give people a sense of relief to know that these trading platforms were well thought of when they were created, and to know that these trading platforms really do work when you use them properly. Otherwise, we wouldn't have these tools and these formulas would be irrelevant. Okay, so let's talk about the trade-weighted dollar index. So here we have a list of countries, and each country has been assigned a weight, which determines how much of an influence do they have on the value of the US dollar. Notice that China is high up on this list. Now, the Chinese currency is not included in the basket. However, with the Chinese economy growing so strong, it does have an impact as the fact that many American corporations build factories in China and have their products made in China. So what happens in China does have a profound impact on the US economy and the value of the US dollar. So keep that in mind. Okay, so more about the trade-weighted dollar index. The main difference between the USDX and trade-weighted dollar index is the basket of currencies used and their relative weights. So the trade-weighted index includes countries from all over the world. So when we're dealing with trade-weighted dollar index, we're dealing with all of the countries, whereas the US dollar index involves only the basket currencies. So there's our difference. And again, if we wanted to get this information, well, I placed the names of two websites on the bottom, so you can visit those places. Now, how do we use this when we're trading FOREX? Well, notice the fluctuations in the US dollar index chart. Watch what happens in the euro dollar chart. So remember, when we use the US dollar index in our trading strategies, we're actually taking a pro-US anti-euro stance, or we're taking a pro-euro anti-US dollar stance, because the euro has such a strong weight in that US dollar index. So that's why, as we can see here, what happens in the euro US or the euro dollar pair has the opposite impact, because if the US dollar index is showing great strength, it's going to also show in trading again between the euro and dollar. And as we can see, the US dollar is gaining strength as the euro dollar is heading in a bearish trend. Now, if the USDX makes significant movements, you can almost surely expect currency trades to react to this movement accordingly. So, when people are studying the euro-dollar pair, they tend to look at the US dollar index to see what's happening, because any significant changes in the US dollar index, that will have a profound impact on the US or the euro-dollar pair. So that's also something to keep in mind if we want to develop our strategies more. Now, again, US dollar index. Now let's look at the US dollar and another currency from the European continent, the Swiss franc. Notice the similarities in these two. So remember, the value of the US dollar goes up, the value of the US dollar in the Forex market also goes up. So there is some symmetry there. Now, let's talk about the dollar smile theory. Many people wonder, how is it that the US economy can be in recession, but yet the value of the dollar is still high? So we're going to talk about that for a second before I end this video. So here's what's happening. The US dollar is strengthening due to risk aversion. So remember, many investors are worried about losing their wealth. So, or losing value on their wealth, excuse me. So they might revert to the US dollar as a safe haven currency. Now let's look at what's happening over here. The US dollar is strengthening due to economic growth. However, the US dollar is weakening due to a new low because of the weak economy. So here we have kind of a smiley face. So you see what's happening is the US economy is in recession. So what's happening is the Reserve Bank has lowering their interest rate. So remember in the previous video I talked about the reasons why reserve banks raise and lower their interest rates. So when the US economy is in recession, many times the head of the Treasury will lower the interest rates on the central bank in order to get the economy moving again. And with the economy moving, that also encourages investors around the world and also companies around the world in order to purchase more goods from the US, which also increases the value of the US dollar. So that is a big explanation as to the reason why the US dollar can be so strong during a recession. Or also another reason why the US dollar can be so strong during a recession is that the economies in other countries are doing even worse than the United States. So investors from those countries are switching from their currency to the US dollar in order to maintain the value of their wealth. And as we can see from this chart, as the gross domestic product is high, the value of the US dollar seems to be stabilized. However, if the gross domestic product is low, meaning the US economy is in recession, there's a lot of volatility in the value of the US dollar as it's actually shooting in a bullish trend. However, as we can see in phases 2, 3, or all the other phases, the US economy has entered a recovery and the value of the US dollar has actually lowered, but not too low, but lowered to where it should be. So these two previous charts should give us an idea as to the fact that just because the US economy is doing poor, that doesn't mean that the value of the US dollar is also poor. So we want to pay attention to data releases. We want to pay attention to what's happening in the US government because that can also affect the direction that the economy is heading in and also the value of the US dollar as that pertains to the Forex market. So by having a clear understanding of what's happening with the value of the US dollar, that can give us a key indication as to which strategy is the right strategy and which direction should we head in when we decide to invest in the euro dollar pair, the pound dollar pair, the pound Swiss franc pair, or anything that involves European currencies, because that's another way we can maximize our profits. So again, when we get involved in the Forex market, we are looking for advantages that we can use in order to gain our profits and also to minimize the number of bad investments we make. Thank you for watching my videos and good trading.